Hey, what's up, everyone? I got a new microphone, so I'm doing this video mainly to test it out, get familiar with it, learn how to use it, that sort of thing. So I'm gonna cover some just general technical analysis on the markets where they're sitting right now. So I'm gonna start with the S&P 500 and see where it's at right now. So it's interesting because the S&P 500 closed above its 200-day moving average today, which is this black line here. Obviously, off of the news after Jerome Powell spoke and after his Q&A. Especially after his Q&A. I think the big takeaway from that was that he had sort of signaled that the rate hikes were going to start to slow in December. So just looking at this headline here, S&P 500 surges above key level on Fed Chief Powell, but inflation and jobs report loom. So yeah, I know we have the CPE coming. I don't know if it's tomorrow. I can't remember. And then the jobs report. Jobs report. I mean, I think everybody's expecting it to still be relatively low as far as unemployment goes. Unemployment's sitting at about 3.7%. I know it's at about a 50-year low, so the job market's pretty strong still, which means that we have a lot further to go if we're going to be heading into a recession. Generally, you would want to see the unemployment rate start to tick up. Let's see if we can pull that up here. Yeah, so here we have the unemployment rate during COVID. You can see how it shoots up, and then as that happened, the market rapidly declined. And then same here in 2007, you can see it start to trend upwards. Sorry if I can bring this down. So as it started to trend upward, I think around September, October 2008 was when the stock market really started to sell off. And you can see the unemployment rate just skyrockets all the way into the end of 2009. So, and then the recession lasted for 2 or 3 years after. So just a key thing to look out for as far as if the markets are going to be heading down or if we're in a temporary rally. So key level here on this headline, they're probably talking about the 200-day move average, and you can see that black line there. The 200-day move average is a huge key indicator for the S&P 500. Multiple strategies that I've built are using that as an indicator, and it's a pretty reliable indicator. We've covered that in the past. So we'll see what it does. Hopefully it stays above and continues higher. Although if you look at the RSI, there's not a ton of room to move up before it might hit some resistance. So we'll see what happens with that. Looking at the NASDAQ, sort of the same deal. Now, recently, the trend on the NASDAQ hasn't been as strong as, say, the S&P 500 or even the Dow Jones. If you look here at the Dow Jones, it's had really strong bullish momentum pretty much since October 13th. So it hasn't really slowed down much since then. The NASDAQ is a little bit of a different story. Ever since the same day, October 13th, it's slowly been trending higher, but it's been having trouble. And it's been pretty volatile too. You can see these big red days, big green days. Today was nice though. One thing I will note with the NASDAQ is it did pretty much touch its 20-day move average yesterday on the 29th. So, and then as you could see, it touched it and then sort of bounced off and closed above, which was a nice thing to see, especially going into today. So if you were in a long position today, you made out pretty well. So Dow Jones, now actually NASDAQ real quick. NASDAQ is still below its 200-day move average. So we'll see where it goes. It's got a little bit more room to climb, but not a whole lot. In fact, pretty much everything is approaching overbought territory, at least on the 10-day RSI. So same with the S&P, NASDAQ, and the Dow Jones is actually above its 70 level on its 10-day RSI. So it is in overbought territory, but that's to be expected when you see a trend as strong as this one. So the Dow Jones is above its 200-day, which is nice. And as you can see, the steepness of this 20-day move average, that's a pretty strong indicator that the price is climbing pretty rapidly. Whereas if you look at the NASDAQ, it's not nearly, that line is just sort of slowly going upward, so not as strong of a trend. And again, you can see the volatility in here. So you're better off, at least temporarily, being in the S&P or the Dow. So let's see, what else was I going to cover? Unemployment rate. Let's go ahead and look at long-term treasuries real quick. I'm going to pull up TLT. Give me 1 second. Okay, sorry about that. All right, so TLT actually reached a bottom on October 24th. So ever since then, it's been trending higher, which is also a good sign to see. That could signal a turnaround in the overall trend as far as the bond market goes. You can see here, November 7th, it closed, made a higher low, and then continued higher. As of right now, it's above its 20-day move average. So it is showing a pretty good uptrend. It's at the top of the range as far as RSI goes. So we'll see if it reverts down and continues higher. If we look at shorter term bonds, they are essentially doing the same thing. So reached a bottom on October 20th and made a higher low. Zoom in here a little bit. Made a higher low on November 2nd and then continued higher. So nice to see. And then as of right now, the 2-year and the 10-year are still inverted. Let me get rid of this. Still inverted. So far, it's made a bottom as well. So I'll have to keep an eye on that. And then the 3-month and the 10-year are still heading lower. So that will be interesting to watch as the Fed continues to hike rates. We'll see how the inversions react. Let's see. One last thing I wanted to cover real quick is if you are wondering about, what else is out there besides just playing the S&P 500, the NASDAQ, and the Dow. So this is XLP. This is a consumer staples ETF. This generally will behave in correlation with the overall market. However, it doesn't decline nearly as much and tends to perform much better than the indices during a recession or some sort of a bear market. So if I go here, let me get rid of this RSI real quick. If I go here and look at it's above its 200, it's above its 20, it's actually reaching a line of resistance here at its closing price today, where it reached back in August. So it's reaching its previous high for the year. Well, not its previous high because that was in April. So, but its most recent high was back in August. So that's going to be a line of resistance there. So, technical analysis wise, it could reject and head lower before going higher again. But consumer staples tends to do much better than the indices when you have a weak stock market. So if you look at the year to date on XLP, it's actually plus 0.69%. So it's not even negative on the year anymore as of today. As of yesterday, it was negative 1.3, just about. So that's XLP. Another one I look at is SPHD. So this is a S&P 500 high dividend, low volatility ETF. This sort of will perform similar to XLP, but it's a different ETF based on the S&P 500. So this is an ETF that will give you more of an exposure to high dividend paying stocks with the advantage of having a lower volatility. So if you look at the year to date on SPHD, same thing, it's actually positive on the year. And then same thing with this one right here, VYM. This is a Vanguard high dividend yield ETF. This one is plus 0.81% on the year. So these have been performing very well since about the middle of October. These have been easily beating the NASDAQ. I want to say beating the S&P 500 as well. Let me type that in real quick just to make sure. Yeah, they've been performing better in this previous month and a half, 2 months or so. SPLV is the last one. This one is also an S&P 500 ETF, but it's just strictly a low volatility ETF. So it still gives you exposure to the S&P 500, but it's just a lower volatility version. So if you look at the year to date, this ETF is only negative 5%, while the normal S&P 500 is negative 14.4%. So that one's also outperforming the S&P 500 on the year, which is pretty cool. And then you got the Dow Jones, obviously. This one's negative 4.9%. So performing about the same as the SPLV. Other things I like to keep track of is more of sort of retail stocks. Costco is a very popular one. Shout out to D's on that one. Costco tends to do pretty well during recessions, during bear markets. Let's take a look at COVID, see how they did through COVID. So, I mean, declined a little bit, but honestly, kept its overall strength. I mean, it barely even went below its 200-day move average. So holding on to that would have been pretty wise. Couple other ones I like is Dollar General. Dollar General has been doing pretty well. Let's look at the year to date. So the year to date for Dollar General it's up 9%, and then this one is Dollar Tree. This one's up 6.9%. So these two have been doing pretty well. Kroger's another one that I like. This one's up 9.5% on the year. Yeah, this one would have been nice to have held since the beginning of the year. And then there was one other. Oh yeah, Waste Management. This one's actually pretty interesting too. So not as strong as the other ones, but still positive on the year. So I thought that was pretty interesting. Obviously, you can see though it's got its waves. So what would probably help with that is buying into it based on its Keltner channels. So the Keltner channels kind of create a range of opportunity for you. The rule of thumb on the Keltner channels is generally you want to buy it when it's in an uptrend. I should back up a little bit. So you want to buy it in an uptrend, but you don't want to buy it when it's in its top range or outside of its upper channel. You want to try to catch it when it's either coming down in the middle here or actually reaching the bottom of the lower channel. So down here would be a good buying opportunity. Actually, let me turn on the moving average. Oops. So it's above its 200-day move average here, but as you can see, if it's coming down into its lower Keltner channels, it's actually a good buying opportunity to get in if you're going to stay in it longer term, and you can kind of ride those waves up. So that's just one way to take advantage of some of those. I believe that's pretty much all I've got. Mainly, I just wanted to make this channel to test out my mic and see what kind of tweaks I need to make to it, and see how it sounds, so I know what adjustments to make moving forward. So, all right, thanks for watching, guys. Appreciate it.